Good afternoon, Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. If you'd like to know more about services, about the services and free products, just visit CFDS.com. Okay, folks, so European market wrap up afternoon. Okay, good afternoon to all. Okay, so afternoon market wrap up. Let's see exactly what's been happening today, and let's try and fathom or try to understand the biases or the bias at present and the actual movements, and trying to explain exactly what's happened. Okay, I think the theme remains Greece. Okay, that certainly remains the actual epicenter of this current financial earthquake at present. Okay, so everything certainly seems to be moving or revolving around Greece, whether or not the creditors are agreeing with the debtors, etc., etc. Okay, so yesterday or last night we had a meeting with regard, and also going into today as well. The meeting last night itself didn't actually come into fruition, or did not yield any results at all. Basically, it was summed up as need to increase the intensity of the talks, as if they weren't doing that already, which is kind of surprising. Okay, and but this morning there certainly seems to be some sort of movement or headwinds there with regards to the actual resolution being sought. Okay, so overnight, as we always start off with regards to the Asian markets. Okay, so Asian markets overnight, the Nikkei was down overnight, so we had a negative risk-off scenario there. The Shanghai certainly has bounced. I think it's recovered everything that it's lost. The Shanghai is back up now to the actual 4,900 level. Okay, so we certainly have recovered back the 6%, given the fact that we were up by 4.5% yesterday and up by 1.7% today. Although the Hang Seng was negative, so the Hang Seng negative, Nikkei negative, therefore a mixed picture from Asia. Okay, and especially given the fact that the US markets did not sell off as substantially, but certainly did come under pressure towards the close, so therefore you had a potential bearish bias going into the European markets, given the fact that obviously nothing had been resolved in terms of Greece. Okay, then we also had some additional data out this morning as well. If I just bring up my data tree, so bear with me 1 second. Oh, here we go, it's already opened. Okay, so I've got my economic data docket here. So obviously the economic data from Germany certainly came out in line. The unemployment rate itself was held at 6.4%. The actual data out of the UK, the construction actually came out better than expected, so that certainly allays any concerns there, and that should certainly give sterling the ability to stabilize, given the fact that we've dropped to as low as 1.522 region now. Okay, we have US data coming out shortly. The other additional data or piece of information that we've received today is the inflation out of the Eurozone. That certainly seems to have picked up. Okay, coming in at 0.3%. Okay, so certainly coming in stronger, and that's the reason why the Euro USD obviously is certainly higher today. So if I could bring up a chart of the Euro USD. Okay, bear with me. Here we go. Okay, so this is something I explained, and I actually tweeted on the at CFDS.education thread. Okay, CFDS_education at the Twitter handle, that we had an unfilled gap above. The unfilled gap around the 1.1022 or 1020 region, and obviously we've pushed higher and closed that gap now. So pretty impressive move there. Okay, on the Euro USD on the back of higher or stronger inflation. Now that obviously doesn't bode well for European equities, because we know the inverse relationship between QE of the EU equities and the Euro USD. So higher or stronger Euro USD negates the QE or stimulatory impact in terms of higher exports, etc. And that obviously has a negative effect on European equities, and that's one of the reasons why they're actually under pressure today. As you can see, the German DAX, I mean, if I bring up the actual chart of European equities, you can see majority of the European equities, although they have swung back recently, this morning they were down. So if I bring up a chart of German DAX and demonstrate. Okay, so we had the German DAX down. We opened up at around the 11,450 region. We dipped as low as 11,270 before we've attempted this claw or move higher. Okay, if I bring up a daily chart, we did hold the key support levels, and we have put in a potential bottoming tail here on the German DAX. certainly worth noting, okay, with regards to the equities going forward, with regards to the German DAX. Okay, so certainly held these support levels there. Now with regards to the 60-minute chart, I can just bring up for you, bear in mind stronger German employment data, inflation data certainly obviously picking up, so that has a potential negative effect due to the rising euro. Okay, so bear that in mind. Okay, so there's two, but although that is offset largely to the fact that the Greek deal is on the table, potentially on the table, so that takes away the uncertainty and the fear. So that may well neutralize the rising euro bearish impact. Okay, so when you have a resolution, that can trigger a short squeeze. Okay, and obviously that's bullish for equities going forward, given the fact that the uncertainty is no longer there. Although having said that, a stronger inflation number negates the QE argument going forward, etc., etc. Okay, although there is the argument from fundamentals that higher inflation generally signifies stronger growth and so on and so forth. But given the fact that the markets are all hooked and love the Kool-Aid, we have a slightly different scenario. Now also, if I bring up the chart of the bonds, okay, and give you an insight there. Okay, so if inflation is picking up, then the euro bond should be dropping, okay, as the yields start to increase, and hence the reason why the euro USD is higher. And as you can see, lo and behold, the euro bond is obviously under pressure today. We are approaching the 200 MA, so certainly observe and keep an eye out for that. Although having said that, I have tweeted out that we had previous support equal resistance at this zone around the 155, and that's exactly where we've obviously reversed. If I go to a smaller time frame chart, a 4 hour, we are now coming into support. We did break out this symmetrical wedge pattern. Okay, just clean up my charts now. Look for potential support zones. So you have a support zone here. Okay, that's really the next support zone. Obviously diagonal trend line support as well for the Eurobond. It still remains in a potential move higher. So even though the Euro USD now has closed that gap, the bond market should be into support. Okay, that should push higher and that should push the euro down. And that in itself will be potentially bullish as a stimulatory effect for European equities. Okay, but again, all eyes on US markets as well. That's something that we all must observe and must respect. So keep an eye out for the US markets, given the fact that they did close in the negative or were looking very weak overnight. Now I'll try and make a separate video with regards to the US markets, because there is an interesting scenario happening on the Dow and the Nasdaq as well with regards to a potential H&S formation. Okay, so this is the actual bond. I've gone over the Euro USD, so currencies have been covered, bonds have been covered. The explanation as to why the markets have rallied this morning, you can look at the FTSE 100 and take that as an example. The FTSE 100 broke and breached below, given the fact that we had weaker economic data yesterday, given the fact that we had uncertainty with regards to Greece and no deal being signed. And also the Asian markets obviously under pressure, even though the Shanghai did manage to hold its own. The Nikkei and the Hang Seng were obviously weaker. So the FTSE itself broke this green bullish candle, failed to hold the diagonal trend line. It sold off as low as 68.74.75. As soon as we've had news that there is a Greek resolution in the pipeline, we've had some bullish comments, etc., with regards to his resolution. Then obviously that's helped the market short squeeze higher. Add in the fact that we had stronger UK data as well. The UK data came in at, just to confirm, and so for educational purposes, the actual PMI came in, construction PMI came in at 55.9, expected was 55, so therefore better than expected, and that's obviously triggered a short squeeze as well. The oil price obviously has moved higher, which has helped the FTSE 100. So if I bring up a chart of the price of oil, this is a chart of Brent. If I bring up a chart of, this is the price of copper. Copper itself is finding support. Now this is something that I did tweet out and I did explain in the video yesterday. And there you go. So with regards to the price of oil, as you can see here, we've had a thrust higher since the morning. So 8 o'clock we were trading at 60, now we're trading almost $61. So obviously that's helping the FTSE 100 obviously move and shift higher, given the fact also that the US dollar has collapsed. Okay, hence the reason why the Euro USD is moving higher, and that in itself helps the FTSE 100, given the fact that it's a commodity index. Okay, bear that in mind. Okay folks, so I think that's a wrap with regards to European equities. The theme remains, it's all about Greece. So bullish news from Greece, the markets will go higher. Bearish news, no resolution, no potential agreement with the IMF, etc., and the markets will go down. So everything certainly seems to be dictated or certainly moving on the news from Greece. Okay folks, so risk on, risk off. wax on, wax off. Be sure to visit cfds.com, certainly in terms of your trading accounts, and there is an offer on as well at cfds.com, so certainly visit and join. Try out the demo platform as well. As you know, I'm acting as an analyst on their behalf, so hopefully many more interactive sessions to come, including webinars, live trading, etc, etc. So certainly everything's in the pipeline. There will be a website soon as well where I will be updating charts on a daily basis. I already do that on Twitter, but I'm going to be creating a daily support, resistance, setup, etc analysis for traders. If you are going to open an account with cfds.com, then I'd encourage you certainly to take advantage of that, because you will be getting that for free. Obviously individuals that are not with cfds.com, there will be an additional cost for that, so that will include indices, forex, and whichever markets you choose really. Okay, predominantly it'll be for indices and forex, and those reports will go out to clients of cfds.com on a daily basis with support, resistance, and potential setups for the day ahead. Okay folks, so take care and goodbye.